Gainorex App when yields rise into a cut. Today's cross-asset read. A curious divergence defines today's session. The S&P 500 holds close to all-time highs, yet leadership has migrated toward banks and materials while parts of tech absorb the aftershocks of mixed earnings. The result is a market that still rewards risk but increasingly discriminates on guidance quality and balance sheet strength. German and broader European equities tell a similar story. Financials and cyclicals are doing more of the lifting, while marquee software names struggle to extend multiples without clearer revenue visibility. Bonds complicate the equity narrative. The U.S. 10-year resting around the 4.15–4.20% range signals that investors are still demanding compensation for inflation uncertainty and heavier treasury supply, even as an easier policy path is widely discussed. In Germany, the 10-year Bund yield has slipped a touch, reflecting a steadier tone and a preference for higher quality duration on the continent. The upshot is a flatter enthusiasm for long-duration exposure in the United States than headline rate cut odds might imply. Credit remains orderly but selective. Investment-grade paper continues to attract interest, with investors favoring issuers that can pass higher funding costs without eroding margins. At the same time, real estate-linked debt is trading as a function of macro spreads and asset quality, and Europe's covered bond complex remains a defensive anchor for regional allocators. Private credit and private equity persist as portfolio stabilizers where liquidity premia and cash yields justify the risk, particularly as traditional diversification between stocks and long government bonds proves less reliable. Currencies are acting as a pressure valve. The euro trades around the 1.17–1.18 area against the dollar, reflecting the push and pull between softer European growth and shifting U.S. rate expectations. That cross continues to inform factor rotation inside equities and the appetite for credit risk, especially among global mandates that manage exposures on a currency-adjusted basis. Derivatives pricing is firm but not disorderly, suggesting a market that is hedged for disappointment yet willing to extend risk when the data allow. For today's users inside Gainorex, the focus is on measuring sensitivity rather than chasing headlines. Earning stop price elasticity as discount rates wobble, sector and factor maps that separate cyclical carry from valuation stretch, spread ladders across investment grade and selective high yield, and FX spillovers that quietly redirect cross-border flows. The signal is that risk appetite remains intact, but it is asking harder questions before it pays up. Educational content from Gainorex App. This article is for information purposes only and does not constitute investment advice or a solicitation. Trading and investing involve risk, including possible loss of principal. Please follow platform rules and policies when engaging with financial content.